Hello and welcome to the Pioneer Builders Podcast. I get to talk about whatever I want to talk about. I have no sponsors, I have no oversight, so I just get to do what I want to do. Today, what I'm going to talk about is basically payroll taxes. It might not be something you hear on an awful lot of construction-related podcasts, but it's something that I have to think about. And as of this recording, it's January 5th, 2024, and I had to make sure that my payroll rates were updated for any paychecks that went out for this particular year. So let me give you a little bit of background on our company. There's about 4 or 5 different employees, and I actually make out payroll still. I actually went to college. Some of it was for finance, business, accounting, but I took 3 different quarters of accounting. For whatever reason, my CPA teacher decided that the payroll section would be something that we wouldn't cover. So payroll is just something that I've picked up over the years. I've been doing construction accounting, since about the year 2000. So about 25 years or so. And it might be something that a payroll accountant or a bookkeeper is very well conversant in. But for those of you who run a business, it might not be something you think about a whole lot. Or if you're an employee, you might get your pay stub and it's just a bunch of numbers and it's in different categories, but all that you're really worried about is what your net pay is. So we'll give you a little bit of background here on payroll, and then I'm going to give you a peek behind the scenes for what some of our payroll rates are. So payroll is basically when you have an employee, a W-2 employee, you have them fill out a W-4, and you pay them a wage that would be a gross wage. That means the amount of money that they would earn if there was nothing withheld or there were no deductions from it. However, you do get those deductions for taxes, for maybe labor and industries, but the employer also has to pay. And so it can be a little expensive, and you really need to know your numbers as to what it actually costs to have employees. Now, one of the other things to keep in mind is depending on how you run your company, the professionalism that you run your company can really make a difference in what your rates are. So if you are a safe employer, if you don't have a lot of layoffs, then those rates should have a commensurate lower rate than somebody who has people getting hurt all the time, there's fines all the time, and a lot of employee turnover. So if you can run a stable company, you actually can afford your employees a little bit better than somebody who's more of a fly-by-night. Now, something else to keep in mind is those unscrupulous individuals out there who pay under the table. And yeah, I'm being a little heated here. This is Bryan being heated. It's just not fair. You're just making it more difficult for the rest of us who operate our business professionally and ethically. So anyway, I will get off my high horse and perhaps I'll step onto my soapbox later. All right, so what is the first one that we're going to talk about today? I operate out of the state of Washington. State of Washington has DOSH, the Department of Occupational Safety and Health, something like that. It's basically Washington State's version of OSHA, Occupational Safety and Health Administration, something like that. What we have to do is we pay into the Department of Labor and Industries. It's basically an insurance fund. So if an employee gets injured on the job, or if they get injured because of their employment, they now have this insurance to cover them. We're in construction, and not only are we in construction, but we do a broad variety of tasks within our firm. And so we've got a lot of different cost classifications depending on what the individual does for work. And some of our individuals wear multiple hats. Greg in particular can do a number of different things. And every one of those different construction related tasks can have a commensurate amount of the premium, so to speak, as in relation to the risk factor. So let me give you a couple of examples here. Probably our primary cost classification when it comes to our employees is wood frame building and construction. So that includes the framing and it includes the siding. So again, I talked at the very beginning about some of the amount of money that has to get paid in comes from the employer side and some of it comes from the employee side. So for framing, for the year 2024, we have to pay, as the employer, $2.84325, $2.84 for every hour worked. We as the employer have to contribute that. Now, how much does the employee have to do? I'm just going to round it from here on out. Yes, bookkeeper / accountant, I could get way far out into the thousandths of a decimal point, but we'll keep it easy. 64 cents. So if somebody works for 8 hours a day, what is that? Between $4 and $5 a day that they're paying into that fund, 5 days a week, 20, 25 bucks a week. You can back check my math. I'm doing that off the top of my head. We, though, if you round it up to $3 an hour, if it's 8 hours a day, that's 24 bucks an hour. Call it 25, make it easy. I'm doing some rounding here. Times 8. 8 times 25, is that 200 bucks a week? I don't know. I could use a calculator. This is only my second podcast. I'm going to do it. 8 times 25, $200 a week. Say you've got 3 full-time carpenters, that's $600 a week. So you can see how when you start understanding the numbers and then you play them out, you begin to see just with labor and industries, you're going to be paying more money. Bear in mind, it does take off your net income, and so you do end up paying less in federal income taxes. All of this stuff is interrelated. Let's look at just a couple of other cost codes here. Roof construction or repair, all types. So keep in mind that the exposure to risk is going to mean you have to spend more money. Why? Because if somebody gets hurt, the stakes are higher. So a roofer, if they fall off the roof, they are going to have potentially a more catastrophic injury than another particular job. $3.56 is what we would pay per hour. An employee would pay 84 cents. Just maybe 2 more. Clerical office, not otherwise classified, and draftsman, about 10 cents an hour is what we would pay as the employer. The employee would pay about 9 cents an hour. So paper cuts, what are they going to get? Now, the thing to keep in mind, though, is with ergonomics, and maybe somebody gets injured from a repetitive stress injury, maybe they would end up utilizing this insurance. And then the last one we'll talk about here is logging. Logging. Chainsaws and trees falling. This is dangerous work. But sometimes we do that. Sometimes we'll drop a tree. So for that particular one, as the employer, it's $11.34 an hour. But the stakes are higher. For an employee, it would be $1.88 an hour. So pretty considerable amount of money. Now, earlier on, I talked about, if you run a more safe job site, you should pay less in some of these things. So we at Pioneer Builders have a claim-free discount of 25%. That's nothing to blink an eye at. We have weekly safety meetings, walk around job site inspections, and we think in terms of safety in our own minds and in our own hearts. It's not just about the dollars and cents, it's about the people. And that is not just lip service. That is how I think. That's how we all should think. And one last point here, just in general, the labor and industry rates increased an average of 4.9% for 2024. I don't know if that's reflecting the rate of inflation. 2023 did have higher inflation, but this year, 2024, it does seem to be more tame. And then we also have an experience factor history of 0.75, the base factor being 1. So we've kind of done what we can do to keep our rates lower. And I still like having employees. It was a change Dad made years ago, and I don't see us changing that anytime soon. Now, here's just another, if anybody's still listening by this point, we have something else in Washington State. It's fairly new. It's called the Paid Family Medical Leave. And the total premium actually decreased this year to 0.74%. So of that percent, employers would pay a portion of that premium, call it about 30%, and employees would pay 71%. But if you're a business that has fewer than 50 employees, that 30% doesn't have to be paid by the employer. And then just one last thing on the numbers here. What that rate is based on for a cap is based off of the Social Security cap. So you can work your numbers there, put it into your payroll program. Every one of the paychecks then, if you're under 50 employees, is going to be reduced by that percentage up until, I think it's between $900 and $1,000. And that's only if, again, they're making about $169,000 a year. And then they would no longer have to pay into that fund. Very few construction employees are going to be making that kind of money. So you would just have to budget in that you're getting your wages reduced by that amount. And there's nothing in general we can do about it. There may be some ways to get exemptions, but here's the thing. I'll just digress for a little bit. You can hate social programs. You can love them. This is not a political podcast, but I will tell you, a very close friend of mine has just a really tough medical situation right now. And he's been able to use the Paid Family Medical Leave Act, and I think even the Washington CARES Act. It's different. The amount has not changed for this particular year, the 2024 calendar year, but it's helped him out. So I don't really waste a lot of energy complaining and thinking and railing against things. If you play much cards, sometimes you just got to play the cards that you're dealt. I play pinochle, I play cribbage, hearts. In pinochle, if you play bitter bunch, you can throw in your hand if you've got 5 9s, no meld. At least that's how we play. And I sure hope there's somebody who listens to this podcast out there that knows pinochle. But these are the cards, and you play them. You do the best you can, you learn the rules, and you try to strategize as best you can. All right, one last one that we'll go over here. We're not going to get into FICA taxes today or any of that. But Employment Security Department, that's Washington State's unemployment. So this is something that the employee does not pay into. This is purely coming out of the employer's side of the equation. This is really based off of what your experience has been if you have a lot of layoffs. I'm going to give you some numbers. In the 2020 fiscal year, I don't think that's the right term, but basically it was July 1st of 2019 through June 30th of 2020. There were benefits paid out, benefits charged of about $1,200 off of taxable wages of about $140,000 for that time period. The next one up was about $1,300 paid out. The next one up was about $3,000. Most, if not all of that, was because of COVID. So we rarely have people have to draw on unemployment. But from time to time, that can happen. We can also seasonally lay an employee off, and they can get benefits. but really I try to do maximum employment all the time. I don't like to deal with unemployment, and I can guarantee you the employees don't like to deal with it either. If you add up all of the benefit charges, it came to about $5,600 with taxable wages of about $565,000 over all of those years. Now, the experience year 2023, which was July of 2022 through June of 2023, we had $0. $0 were paid out in unemployment. So what they end up doing is taking that, they come up with a ratio, and that helps for what your unemployment insurance tax rate is based off experience. It's going to be different for different companies. We fall into the 0.88%. And then there is a social cost rate. We have no say in that. It's 0.43%. The subtotal of that is 1.31% is what we have to pay in unemployment tax rate. And it is up to a tax base of $68,500. So once an employee hits $68,501, Pioneer Builders isn't paying more into that fund. So let's just give you an idea of what that looks like. 68,500 times 0.0131. You have to do the 0.0 because we're talking about percentages here. $897.35. We'll use 3 employees. That's about $2,700 a year. But there is another part of this, and that is the Employment Administrative Fund, and that's 0.03%. If you add all of that up together, it's 1.034. Let's do our math one more time. 68,500 times 0.0134, $917.90. Multiply that by 3, $27.53.70. That's just for unemployment. So you begin to understand having employees is a true cost. And when you start quantifying it, then you can start charging for it. Otherwise, you're just kind of pulling out numbers out of thin air. Now, I don't know that you need to do this every time you do a job, but it can help to figure out what you're charging for your employees. Not only do you have to cover these costs, but you're taking risk. You're taking liability on. You also have to make a profit. Or what's the point in being in business, unless you're in a nonprofit? What's the point of being in a for-profit business if you're not making a profit? And if you don't know what your numbers are, you're just guessing. You might have net income. You might have, good gross margins when you take into consideration your sales and you subtract out your direct costs. But if you don't know why you're getting that, you can get burned. And if you don't know how the different factors of a lot of layoffs, having an unsafe workplace can contribute to having higher employment costs, well, you're just behind the 8 ball. You're just not as professional as you could be. And that's understandable. This can be intimidating stuff. I was just talking to a guy today, and he's been in construction, I would say, all of his adult working life. But he is self-acknowledged he doesn't understand the business side. When I told him, because he was looking for a job, I said, shoot me an email and I'll save it. That's what I do with all of these folks. I'm not actively hiring right now, but I like to interview. I learn. I get to see what they would want to make. I get to keep my finger on the pulse of what's going on in my local economy. So anyway, what I end up doing is if I just talk to them, I can say, hey, shoot me an email and I'll save it. I've got a folder in my email that is for employees, or potential employees rather. I've got a separate one for employees. So I can click on potential employees at any time and kind of run through some of the employees that I've talked to in the past, even if I'm not currently hiring. You can create a rapport with a person, you can get a hold of them, and maybe when the time is right, they can come to work for you. Anyway, with this particular guy, he doesn't have a computer. come to find out. Because he told me, oh, I'll just text you my email. No. And so I took just a brief moment to train him a little bit. I am not going to cull through my emails to try to find somebody's email address if I want to use them in the future. I'm a businessman. I'm busy. I don't have that kind of time. And he was very humble about it. So I hope I'm not coming across as arrogant or egotistical about it. I do have to be professional and a business person. And he was great. And so hopefully he'll send me an email. He does have a tablet, but that is part of being in business, is understanding the digital landscape, the digital tools, and using them to your advantage. I think one last thing that I'll just give you a tip as I'm wrapping up here. I take all of these pages and I scan them, and I've got a whole system on how I do digital filing and organization. So I've got tax rates, and I think I just deleted some of my previous ones because it was no longer relevant, but I have them in a very quick location in case I ever do need to access them. So that's just one other thing. No, I guess I'll add one last thing, and maybe I'll add something else. Nobody's telling me what to do here. It's all me. The other thing, so I have to take these tax rates and update them. I use QuickBooks. I just updated the software that I have to use, sadly, and that's for a whole nother topic of conversation. QuickBooks Enterprise Solutions 24.0 is what I'm using. So I have to go into every one of these payroll tax rates and update them. So there's one, I think it's technically a deduction is what it's characterized within the program. For each one of these labor and industries employee numbers. Then I have to go into, it's probably classified as a company contribution. I can't remember. I set it up a long time ago. And I have to do all of the employer sides of things. Then for the paid family medical leave, even though we have a bookkeeper and she sent us some of the math, some of the inputs to do, I ran the math myself and kind of came up with something different. It was practically pennies different. I went with my numbers, but I ran the percentage, and then you change the tax base from that 168,400 or whatever the Social Security number was times the percentage. And then I put that in as well. And then that will automatically be tracked within QuickBooks as I make more and more payroll payments. And then the same thing with the Employment Administration Fund and the unemployment, the Security Department side of things. I updated one of the numbers, the other number didn't really need it, and they didn't increase the taxable wage, taxable base for the year. So you get these notifications in December is when I get them. And then you have to make sure that you update your numbers, then verify that you've done it right when you make out your first series of paychecks. Keep your paper copies handy, get it done in January, and go from there. All right. I did have a couple of other things that popped into my mind. One of them, what I do, and here's my disclaimer. Probably should have said this at the beginning. This is not tax advice. You cannot sue me for any of this. I do not represent anything at all whatsoever. Please don't sue me. Do your own research. Take this all with a grain of salt. It's just my own particular meandering thoughts. What I do is I pay the employees earlier in the week, but they get the pay should hit their bank account typically Thursday or Friday. And when the week spans the end of the year, so say it's December 27th through, what would that be, January 3rd, something like that. I don't pay them out through the end of the year. I've done that in the past. I pay them out the following year for that week's work. So I pay 5 days of work the following week. So when you do that, just make sure that you update your numbers come January, even though some of the work occurred before. It's for when the paycheck is written. So make sure that you keep that math sorted, keep it nice and organized, and you'll be happy if you do your own quarterly reports and filing, or if you hire somebody else out. I think maybe the last thing that I might say about that is, if you keep all of this organized, it does make your life easier. But it's the same thing if you're project managing a firm, an electrical company, a plumber, and you've got your ducks in a row and everything's organized, they're going to want to work with you. And it's the same thing if you work with another company to do your tax preparation. If you have everything nice and tidy, they're going to like to work with you, and you're going to pay less money. And maybe that's the last thing here. If you have all this dialed in, you're going to pay less for your employees, and you'll pay less to administer your taxes. And even if you're doing it yourself, there is the economic concept of opportunity cost. You will have less of your own time gobbled up by non-productive activity that you can devote to the company if you want. You can devote it to self-care for all I care. You can spend more time with your family, whatever. But you won't be wasting time unnecessarily. All right. Well, thanks for catching this. We're getting close to 30 minutes here. Hope you enjoyed this. I hope you learned something. I view this as my way of distilling a whole lot of experience and a lot of mistakes, but a lot of learning along the way. I like how everything works. It is just very interesting to me. Even on the taxation mathematics side of things, my mind is at more rest and at peace when I understand the ins and outs of a matter. Well, thanks so much for listening to this. Maybe you watched it. I still got to figure out if I can get this over to YouTube or something. Right now, I'm primarily uploading it to Spotify first, and I connected some other things to it, so hopefully it's finding everywhere. Please subscribe to this. I'm still making it up as I go along. Maybe it's going to be once a month. I really honestly don't know yet. Follow me on social media. I'm at Pioneer Builders Inc. pretty much everywhere that I do social media. Most of my social accounts are a little bit different. Sometimes I do recycle some of the content, but TikTok has actually been done better for me lately, which is still really a small account, but that's okay. Instagram is my primary. YouTube, you can check me out on there. And then Threads, I get way more personal on there. You can kind of see things through the eyes of Bryan over on Threads. So anyway, that's kind of fun for me. And then lastly, I am on Build Show Network with a lot of other contributors over there. And that's where you'll get some more long form video content. One video that was just released this is pretty funny. At least it's funny to me. So Steve Basic, you might know him. Steve Basic Architects, he's extremely experienced and prolific when it comes to the amount of content that he puts out there. Anyway, he was up here, Pacific Northwest, Washington State, and we shot a couple of insanely long videos. And so this one was like, call it 40 minutes. And it was pretty interesting. Over on the newsletter that Matt Reisinger did, he notified the audience, hey, by the way, you can watch our videos in 2 times speed. Basically, like, this video is so ridiculously long, I don't know if you're going to be able to sit through this whole thing, watch it in 2 times speed in order to get through it. It was pretty good. At least it was funny to me, and now you have insight into my personality, what I think is funny. All right, guys, thanks for making it this far. I don't know what I'm going to talk about next time. I don't know when I'm going to talk about something, but make sure you turn in, and we'll see you next time on the Pioneer Builders Podcast.